Hello, hello, testing. Can you hear me?
Yes, sir.
How are you?
Good night, everyone.
Good night.
I am sorry for the delay, but apparently Miguel sent the wrong link. He was supposed to send the link that we all just kind of log into, but the one he had was the one set up with him as the host. So I had to call him out of his pajamas or something and say, you need to let us all in. You sent the wrong link. All right, so here we are. First things first, let me just see who is in the room before we begin, because tonight is a very special night. All right. By the way, which week are we in? Anybody?
Week 6.
Yeah, we are in week 6. Okay, which means that next week is our midterm examination, which means that when class is over tonight, I'll be sending you your practice questions for 4 and 5, which means I didn't send it before because I wanted us to finish tonight's class first, so you can use the practice sessions together to help you to get ready for next week. Housekeeping first. We'll talk about that in a minute. All right. Kashanti, are you there? Oh, Kashanti is not there. Okay. Vanessa. Vanessa. Okay. Hadith.
Present.
Okay, excellent. Still on board the Titanic. That's good. Did you send your homework, Hadith?
Yes, I did. I sure did. I was just about to, I called you, but I guess you had your phone. You probably was still Valentining. I don't know. I emailed it to you directly.
I'm sure I got it. I'm just doing a follow-up just in case somebody missed the boat somewhere. Okay, that's fine. Clinton. Clinton. Okay. Mario.
Present.
Yes. I got your email, Mario.
This is good.
Your homework, which was good.
Did you mark the homework?
Well, the homework, I don't usually mark the homework. I just give homework so you could practice and stress.
Oh,
Okay.
mission accomplished.
Yes. If you did the home, no, I didn't get too many emails about I didn't balance. What is a debit and a credit, and stuff like this. So I kind of get the feeling that folks did a lot of research, did a lot of review, went back to check stuff, remember stuff from class, put everything together, and were able to do a pretty good job with the homework questions that I've seen so far. Okay, and that's really the whole idea. All right, Daniel.
I am here.
Hey, Daniel. Excellent. Did I get your homework, Daniel?
I sent you an email. I don't know if you were getting them.
I did.
You did.
Mhm.
I didn't get. Okay. I guess we could talk later because I didn't receive anything back.
Okay. Okie dokie. All right. So what to do is when we're done, just send me a refresher note tonight, like hello about that matter, so I can look at that tonight for you, whatever it is.
Okay, no problem.
Great. Crystal.
Yeah,
Hey, Crystal is here. Yes. Surviving Accounting 101. Blaine.
Good night, I'm here.
Yes, indeed. Okay, Denise.
Denise has no mic, so she said she.
Oh yeah, Denise says she's hanging out in the wilderness somewhere for the other Jews. Okay, Veronique.
Present.
Great. Did you submit your homework, Veronique?
I sure did.
You sure did, absolutely. And Chanel?
I am here, present.
Okay, Chanel, excellent. Did you submit your homework, Chanel?
I sure did.
Wonderful. So now, before we get into the final discussion tonight, about classified balance sheets and accounting concepts and all that. So chapter 5 is not too tough a chapter, like maybe 3 and 4. 4 had to do with adjusting entries, I believe I remember correctly, and then the worksheet. I might as well tell you, I'm going to give you homework tonight on the worksheet. There will be a worksheet in the exam. Without a worksheet, you're not really a serious accounting 101 student who wants to do accounting. The worksheet is really the accountant's domain for putting all of his work and getting things cleaned up before financial statements are done. So please, if you're still not 100% comfortable about certain aspects of the worksheet, go back and do another one. I will give you one for homework for sure, so that you can practice it, but doesn't hurt to do an extra one. Okay. In
Yes.
the main question,
We didn't get homework for last week, right? Because I didn't see any. We still was reading
yes,
Chap-
just reading chapter 5 for today's session. The
Yes, sir.
homework for 4 and 5 will be sent out to you immediately after class tonight. When I say immediately, I mean within the hour.
You can take your time.
No,
And Master Clinton, eh? And my own straight over Clinton.
A question, Mr. Wilkinson. I never received any homework
Wow.
at all?
at all.
Who said that?
Plain.
Blaine, why didn't you call the cops and say something?
I was in the class last week. I'm in class today, so now I'm hearing about the homework. And I hear everybody saying they get homework. So I trying to figure out how was homework sent out.
So your colleague, you were here last week?
No, sir.
Okay, that's Blaine. All right, Blaine, do you have my email address?
Yes, sir.
Great. When we're done, so that's 2 persons, yourself and Tanya. When this class is over tonight, please send me a text, email, or something with the respective issues. So in your case, Blaine, I can send you all of the homework. Okay, so you're gonna have a very busy week, but that's okay, because the homework is really designed for you to practice the material that we discussed and that you've read. And without practice, you're not gonna be good at doing it in the exam or in the real world anyway. So don't see it as a burden. It just means that while folks are having fun all of this week and all this weekend coming, you're going to be on lockdown messing with that until your examination is over on Monday. Okay, so
Mr. Wilkinson, the exam, is it in person or is it via Zoom?
I need to confirm that with the institute, more than likely in person
At the institute?
at the institute.
And would it be class time, just to get an understanding, because I need to make plans if that is the case.
Yeah, it will be class time, 3 hours for those who need it. Okay, from
Okay.
6 to 9. Not everybody will need 3 hours. Some people will be out in about 17 minutes because they're just brilliant at what they do. But for you need 3 hours, you have the full class time to do it. And when you're done, because my concern is not to stress you necessarily with time per se, but to give you the time you need to do it as correctly as you can.
Are we allowed to take the book into the exam?
Depends on why you need the book. Not really. If you take it, you won't need it anyway.
But are we allowed to?
Well, why would we want to take it? It's not going to be an open book exam.
Okay, thank you.
Yeah. Now, if you happen to be studying after work until time to go to class and all that, and you have your book with you, I'm sure they won't stress you about it. You'll have to tuck it on your desk, under the desk somewhere until the examination is over. Okay. We won't look at you and say, like unvaccinated people, you have a book kind of thing, and then there's a penalty. No, you just tuck it somewhere and you do the exam. Your
Mr.
example,
Wilkinson,
yes.
sorry, will you be providing, like how the book has the balances, so we can make sure we're balanced, or you're just leaving that up to us? I just want to know.
Yeah, no problem. That is entirely up to yourselves. I wouldn't say what the answer should be, because I want you to focus more on the process rather than the result. If you balance, you still only get 2 points for each one that you get correct. The real strength is in getting to the balance, that process. That's where you get all your points. Okay? So don't worry so much about balancing. If you do a trial balance that doesn't balance and you have time, you could double check. If you don't have time, don't waste time. Leave it and move on, because you're going to get points for everything you do correctly. If you
What's the
will
time
you
for
be-
the exam?
sorry,
What's the time for the exam?
6 to 9. Past
Okay.
time.
Okay.
And what about I just have a question, Mr. Wilkinson, like, like how we have certain questions that says, open the T accounts on some of the examples you gave us. Would all of the questions require us to open the T accounts per se? And are you providing us with I guess, sufficient paper, or what are we doing?
No, all of the questions will not require you to open T accounts. Some will say, a question might say specifically, open T accounts for this particular question, just to kind of give you a head start and a guide as to where you're going. Others will not say so. It'll presume that you should know that if you're trying to keep track of account balances, the T accounts are indeed the best way to do it. And then other questions will not require a T account at all by the very nature of the question. For example, prepare journal entries. You will not need T accounts. But if the question says prepare journal entries and post it, and before preparing a trial balance, then you know the posted part of it involves the T accounts.
Hold on. This ain't gonna be like a computer lab, like we writing on papers.
No, paper will be provided to you by the Institute.
Red.
And while we're on the question of paper, please do not write any of your examination in pencils. Please write your examination with a blue or black pen, because pencils get very strange to see at 1 a.m. in the morning when it's time to grade. So ink is always a good idea for everybody's comfort, especially mine. The examination format will be some definition questions like, what is a balance sheet? How do you calculate net income? Whatever, things like that. And then there'll be a couple of short answer questions like, what is the meaning of the following principles in accounting? And then I'll list them. What are the steps in the accounting cycle? Things like that. And then of course, there will be problems. There will be at least one problem from every chapter. Is that going to be, does that mean it's going to be 5 necessarily? More than likely, but no less than 4. So you get one question at this point, from what I can see, from basically every chapter, along with the few definitions and short answer questions you're going to get, so that you get an opportunity to attack it from all angles. Now, any questions about anything in the last 3 chapters of homework chapters itself that you have a concern about, still something that bothers you? Still, between chapter 4.
That chapter 4, like closing to the income statement or the income summary, like that. It's kind of it.
Yeah, I'm glad you said that. For some reason, some students continue to have problems with closing entries, when in fact it's one of the easiest processes in accounting history. But again, for new students, it obviously doesn't appear easy until you get familiar with it. So you will get a homework question on closing entries. You will get a test question more than likely next week on closing entries. So I will encourage you to make sure you do the homework question, and always do an extra question. Doesn't hurt, from your text. Just pick one so that you can practice it. That's the deal. And remember, when you are doing homework and practice questions on your own, don't be bashful to go back to the text to find out the exact steps that are taken in your text. That's what you want to do. Because by going through that process, you learn the correct way to do it without guessing. Okay? So don't be afraid to go back to the chapter that you're doing the homework or review from and actually see how the textbook has it written up. And exactly the way they have it written up, you follow the same format in doing your homework and practice questions. For sure. And if you do that, you'll be finer than if you don't do it. Okay? Now, since you brought it up, let me just say this about closing entries. Remember, first of all, that balance sheet accounts are never closed, correct?
Very true.
Once you understand that, then you don't tie yourself up trying to close them in a test. How about that? Students have attempted to close balance sheet accounts, even though we've said balance sheet accounts never close. Okay, so that's the first thing to remember. The next thing to remember is that closing entries only involve which accounts? Anybody remembers?
Short-term accounts, right?
Sorry?
Short-term accounts or short-term assets?
No.
Short-term accounts on the whole.
No balance sheet accounts are involved in the closing process. None.
So what do you close?
Well, is the balance sheet the only account that you know about? The only
Income
statement?
statement,
Which one?
the income statement.
Income statement. All of the closing entries are in the income statement.
I do
When you guys get around to doing that homework and an extra practice question, by the time you're done, you should be experts and tired, so tired of it that you understand it clearly. The more tired you feel doing it, it means the better you understand it. Remember, revenues are closed at the end of the year. Expenses are closed at the end of the year. Okay? Only those two categories, revenues and expenses. Now, there's a special account that we use for closing revenues and expenses. Anybody remembers the name of that account?
Is it contra accounts?
No?
I don't
The
know.
income summary.
Yeah, the income summary account. Now, I'll tell you a little secret about accounting. Accounting is a little tricky in that it's not tricky. Accounting is tricky like this. If you practice it, it will reward you. If you don't practice it, it will not reward you. How about that? All right, so be careful, make sure you put in the time. Of course, you're gonna spend hours doing it, depending on who you are, but what the hell? That's what it's all about. If one of your colleagues said to you, man, I'm finished studying, that was easy. Don't stress, it's gonna take you 5 hours more, take 5 hours more. Whatever it takes for you to get it. Don't worry about them. Okay, everybody has their own time and measure. So just take the time and just plod your way through. Okay. So the income summary account is the special account. It's a temporary account that we set up to close revenues and expenses. Remember we said last time when we're closing entries, what's the normal balance for revenue?
Credit.
Credit. And so to close a credit account, what you have to do?
Debit.
Debit, the in. To close which account?
To close the
Credit.
revenue account.
Gotta
Close
debit it.
the revenue account, you debit the revenue account.
And what would be the journal entry once you do that?
Credit
Close
income summary.
Yeah, we credit income summary. So the debit to revenue, credit income summary. Remember the double entry system? It still applies.
Yeah.
Okay. That's the revenue closing. Simple as that. See that? I didn't even break a bloody sweat. I don't know about you guys. The other entries to close at the end of the year are the expense accounts. And they have to be closed one by one because they all have their own identity. So what's the normal balance for an expense account?
Debit.
Yes. So if your salary expense is $300,000 debit, in order to close that account, what do you have to do?
Credit it.
Credit it, and then in the double entry, what do you debit?
Debit the income summary.
Debit the income summary account. See that? And you
I-
do that for every single expense account that you have in your general ledger.
Then you do total expenses, then go about your business.
Well, once you've debited the revenue account, that account should be brought to what?
Zero.
Zero.
Once you've credited all your expense accounts, each one of them should be brought to what?
Oh, zero. So do you have like a total expense closing, or such a thing doesn't exist?
Well, you're the guy who runs out before the thing.
Sorry.
Yeah, man.
Yeah, he's running out.
That's him, Mr. Wilkinson.
I know he sounds like that kind of guy.
Calm down, Mario.
Once you debit the revenue account, what is your balance?
Zero.
Zero. Once you credit each expense account, what is the balance in each expense account?
Zero. So they no longer exist.
No, they don't. That's why we say they are
Closed.
closed. Now, once you have closed those revenue and expense accounts, the only balances you have are sitting in which account?
The what you call it? The balance sheet.
No.
You can ask the question again.
Which account did you use for your double entry when you closed the accounts?
Income summary and expenses.
No, the expenses are closed.
Income
Okay,
summary.
income summary and
summary.
income statement.
Only account that is open after the revenue expense accounts are closed is income summary.
Summary, yeah.
As you will see when you go back to your text to look at it again and do your homework. Okay. So only the income summary is left with the debit and credit balance.
Okay.
Whatever the difference is will be a net profit or loss. And everybody gets that?
That's what I had a question with, Wilkinson. I think you made a comment, if I'm not mistaken, about the balance of the income summary, something being larger is what you will carry down or something, or I'm not mistaken. Can you
Yeah.
clarify that?
Yeah, remember, let's say the revenue in this example was $300,000, right?
Mhm.
So when you debit revenue account 300,000, what do you credit?
300,000
Income summary.
income summary,
How much?
300,000.
300,000.
Okay, and let's say your total expenses were 200,000 credit, what would you debit?
Income summary.
How much?
The debit income summary.
For how much?
200,000.
Good. Are your revenues greater or lesser than your expenses?
Greater.
Greater.
So
100,000.
if you look at your income summary account, you will have a difference of
100,000.
100,000.
debit or credit.
Debit.
Oh, debit.
You never have the difference being, remember I told you the difference always goes on this larger side.
On the larger side, right? Okay. Right.
So debit or credit balance.
Largest side in this case would be a credit.
So you would have $100,000 debit or credit.
Oh, credit.
Credit. Is that a
Yeah.
revenue? Is that an expense? Is that a loss? Or
It's a
Profit.
gain. What's the profit?
yeah, how do you know?
Because it's on the greater side.
Because a credit on an expense account is a good thing.
Well, whenever revenues, remember revenues are credited, expenses are debited.
Debited.
Right.
And the rule of accounting is whenever revenues are greater than expenses, you have a profit. That's it.
Right.
Yeah. Okay.
And whenever expenses are greater than
See,
revenues,
it's a
you have-
loss.
It's a loss. Yeah.
just like your personal life. If you get $1,000 at the end of the month and your bills are $4,000, is that a profit or loss for you?
You didn't have the first figure.
I
Is that
wish
a
I had
profit
that
or loss
figure.
for you?
How much you got in? 5,000 a month?
No, your profit is 3,000. Sorry, your salary is 3, your expenses are 4.
Oh,
So
geez.
no loss.
Loss.
Yeah. If your salary is 3 and your bills are 2, is that a profit or loss?
Profit.
Profit.
Same principle. Okay, so what would be the balance in the income summary account?
It would be the 100,000.
100.
Debit or credit?
Be credit.
Credit.
Yes, okay.
Yeah, understood.
Now, the final thing you have to do is close the income summary account because it's only a temporary account.
Mhm.
Like a
How do you close it?
Goes into the equity account.
So the balance goes to the capital, which is a credit.
What's the journal entry?
debit,
Debit, income
Debit.
summary, credit, owner's equity.
capital.
Yeah, debit,
Mm.
income summary, credit,
Credit,
owner's
capital.
equity. Absolutely.
Mhm.
What is the balance in the income summary after that?
0.
Zero.
Oh, so we close it.
So who raised the question on how to close accounts again?
Who's me?
Yeah. I know you didn't realize it was that simple.
When you talk about it, it's so easy, but when we put pen to paper, it's like mud.
I
No,
know.
man, I rebuke that in the name of Jesus.
That's what it is, like money.
Sometimes,
Actually,
honestly,
hours?
it's not like that though. I was just over exaggerating.
Oh, that 3 hours could go so fast.
I can
Oh,
eat for
please.
6. I can just bring my pillow.
Let's make Mr. Wilkinson proud, man.
Absolutely. I don't have no horse dead and cow fat. Okay, for sure. All
Is
right.
the question, is the exam short questions and multiple choice, or it's straight
I doubt multiple choice in that. I ain't like.
Oh, you want me to give you the format again?
yes, please.
I guess
You're
the
going to
mixture.
have a few definitions,
Yes, sir.
and you're going to have a few short answer questions like what is the accounting cycle, and you list the 5 steps or 6 steps,
Yes, sir.
and the rest of them will be problems.
Okay.
I will be looking to give you a problem from each chapter potentially.
Okay.
Don't try to figure out which one is coming. That's a disaster.
No, sir. No, sir.
Okay.
Yes, sir.
Just be ready to do a problem from each chapter. That's why I'm pretty much suggesting that you do all the homework questions, because a lot of the homework questions might very well come from some of the examination questions might be similar to homework questions if you're lucky. So it's important
Can
to
we
do.
get a study sheet for the study guide for the definitions and short answers, just so we can narrow down our study?
No. Examiners hate to narrow down anything. You
I
just
think the study guide is the homework, to tell you the truth.
that's the
So
real.
No,
the
I'm
definition.
talking about the definitions and short answers. There's a lot of things you can ask for with definitions and short answers.
Okay, and your question is
Can we get a study guide?
from where?
Zero, Chanel. 0. Okay? In accounting language, 0.
Oh my goodness.
Oh boy, you're too joking.
Your text is your study guide. All those things in bold black print that keeps jumping out at you. Those are the.
Yeah, that's why I asked if I could take the book in.
No, well, you can take the book in until the exam begins. Once the exam begins, then dog eat your lunch. Book
Does it
closed.
start promptly at 6? Like as soon as 6 o'clock hit, 6
You
o'clock
may
hit.
need that, Mario. You may need
Yeah.
that 3 hours full.
Now, it'll start 6, but if you choose to come in 7, then you'll have 2 hours instead of 3.
My gosh.
Don't shoot yourself. Please don't do it.
Okay.
Mr. Wilkinson, go ahead and email me over the test paper. Let me practice on the actual test, please.
Not to worry. Once you've done, if you did your first 3 homework sessions and the next 2 you're going to be assigned, and just stay in the book reviewing, practicing, and learning those little things in bold black print. Like what are the 3 elements of the balance? What are the 3 elements of the balance sheet? Anyone?
Assets, liabilities,
Liabilities, owner's
owner's
equity.
equity.
See that?
Yeah,
Yeah, simple as that.
yeah.
But that only happened because you already started studying, you attended class, you listened to stuff, you read stuff, and you practiced stuff. It's a combination of all these things. Okay, so not to worry if you're doing the time.
We ain't have no cash. We have a cash flow spreadsheet on that too? Do.
No.
No, we haven't done the cash. How did you get there anyway?
We only have an income statement, the
Yeah.
statement of owner's equity, and the balance sheet, right?
Pretty much. You're
I
not
know
gonna
you
get,
got one thing, but I know you have everything together for
you're not gonna get anything that we didn't cover in the chapters, meaning you'll just be
We covered the cash flow, but I just was hoping we skipped that.
So like cash flows ain't important.
No.
No, cash flow is very important, but we're
How much-
not focusing on that until the next part of the semester.
Okay, all right, sounds good.
All right, if I give the cash flow statement, it'll be a simple question like, what are the three main elements of the cash flow statement?
Okay,
Okay, but as far as being able to complete one, you won't get that in this test.
okay.
All right,
Operating, financing, something else.
all right, yeah, so yeah, you guys are looking at just panicking unnecessarily because
No.
you already remember stuff right off the top.
Like might take 1 or 10 minutes.
All right, chapter 5. Okay, chapter 5. Financial statements. For those of you who've read the chapter already, and when you do read it, you come across the objectives of financial reporting. And actually, there are a couple of them that you need to know. First of all, financial reporting gives information on cash flow, money coming in, money going out, gives information on stewardship, what assets the company owns, what liabilities it owes. And so financial statements would provide all these kinds of things to the management and the shareholders of the company. Okay. Now, in accounting, we have two types of characteristics of accounting information. One group we call quantitative, which involves money, dollars and cents. And then we have the qualitative characteristics, which you'll see, which does not involve dollars and cents. Okay? It involves some other stuff. Do you guys have like a little diagram with the qualitative characteristics? I hope so.
Yeah, we do.
Yeah. Okay, so you should see things like qualitative characteristics such as relevance. You see that?
Yeah.
Yeah.
And
Ability.
faithful representation. And what's the other one?
Comparability, verifiability, so on and so forth.
Okay, so you guys have that stuff. All right. So these qualitative characteristics are those characteristics in accounting that does not involve dollars and cents, but they are important. For example, with regards to relevance, accounting information cannot only be correct information, but it has to be relevant. In other words, if shareholders want to see financial statements for this year and you show them one for last year, that's not relevant to now. You follow that?
Mhm.
Okay. Information in the financial statement has to be correct. Okay. Faithful representation means your financials need to be complete and free from error. And we use the word material. If you miss something by 10 or 50, $100 for a multi-million-dollar company, that's not considered material. Basically, though, the numbers have to be correct. That's what faithful representation is all about. Okay. And then this issue of comparability means that financial statements should be done in such a way that you can compare them from one year to the next. That's why when we set up a balance sheet, we use the same format every year. When we set up an income statement, we use the same format every year. The only thing that changes are the numbers. If a new account is added, comes in, then we add it, but the format never changes. So that we can always compare apples with,
I don't know.
Yes.
okay? That's what comparability is all about. Verifiability means if you say in your financial statement that your cash balance in the bank is 10 million, when you go to the bank account statement, it should have 10 million, not 1 million, like some companies do. They lie on the financial statement, and when you go to verify it, what they say in the financial is incorrect. because people are always looking for some way to get around the system in one form or another. An accounting profession is no different. They had a doctor a couple of years ago who was treating a bunch of women for breast cancer. He diagnosed them, he said, with breast cancer, and they discovered that the women did not have breast cancer at all. He just used it so he could make a whole ton of money by treating them for cancer at very high rates. Of course, I believe he's now rotting in jail, which would be good. Okay. Timeliness. Financial statements need not only be done correctly, but they have to be done on time. Doesn't make sense going to your boss with information if it's old. He or she cannot use it anymore. That's what timeliness is all about. If you're doing an annual financial statement, it should be for 1 year, not 3 months. And it should be done on schedule. Old information, out of time, out of date, is of no value to anybody. And then finally, understandability means keep the information as simple as possible so the average person can understand it. Some accounting information is so complex, only accountants can understand it. And some accountants can't even understand it, depending on who the accountant is. All right. What about accounting conventions? Do you have that in your book?
We do.
Yeah. What are some of the accounting conventions? Things that we do all the time.
Consistency,
And say,
full disclosure, and conservatism.
yeah, conservatism.
Conservatism.
Okay, conservatism. Consistency in accounting simply means that everything is done the same way, the same format, the same order, the same structure every single time. Nothing changes unless a transaction changes and the numbers change. But as far as the structure and format and reporting requirements, it's every year the same. Okay? And the reason, again, is to facilitate comparability so we can compare apples with apples and to make sure that some accountants are not manipulating information and structures for their own personal benefit or to hide illegal activity, which happens still all too often. Okay. Full disclosure means the firm, through its accounting records, must indicate everything that has happened. Don't hide anything. If you suffered a loss, don't turn it around and make it an artificial gain by adding more revenue that never happened. Okay? That's not full disclosure and is also fraudulent. Okay? Some companies hide information. They don't give you the full disclosure. They don't tell you everything you need to know. Even as an investor who wants to invest in a company, if they think that the information is going to cause the investor not to invest, then they'll hide it or lie about it, and therefore does not conform to the accounting conservatism convention. Conservatism, on the other hand, means that basically accountants will always try to find all the expenses that are necessary to account for. And when it comes to revenue, only revenues that are going to be recognized are those that accountants can actually identify. We're not interested in what might happen as far as revenues are concerned. We're only interested in what you've already done. Okay, so you sold something, good. You provided a service, good. We'll record that as revenue. And that's it. As far as expenses are concerned, we record every expense too. But we also, as accountants, seek to find any other potential liabilities that can be converted to expenses eventually. So in being conservative, what do? We only record revenue that we actually earn, but any potential expenses along with the actual ones, we'll account for those as well. Okay, so that we cover all of the costs. Okay. There's another convention called cost benefit. If something is too expensive to produce, don't do it. Okay, if the benefit is going to be less than the cost, then it doesn't make sense doing it. Accounting is no different. So if you're preparing a set of financials and for some reason it becomes too costly to do it versus the benefit of doing it. So let's say you didn't do financial statements for 7 years and the banks say they need statements for the last 3. Then it makes sense only to do statements for the last 3. Those before that, will have no real benefit to the bank or as a lender or the shareholders or practically anyone. Okay? So that's how that works. All right, so those qualitative conventions and conventions, you just have to learn them. Please, you do want to read them, but when it comes to learning them, just stick to the core meaning of the characteristics and the conventions. There's one other area of accounting that you need to know about. It's called ethical reporting. And in essence, that means all accounting reports should be fair, honest, and complete. No lying, no fraudulent activity, no changing numbers to stuff that don't exist. That is unethical and sometimes even illegal. Okay? Don't let anybody get you and caught up in that nonsense. All right. So those are your conventions and your characteristics and your little quick pep talk on ethics. Ethics in accounting, like everything else, is all about doing the right thing. Okay? Doing it right is not necessarily always ethical, because you could be doing it right, but it could be unethical. But doing the right thing is always ethical and correct. Okay? For sure. If you guys are fortunate enough to have the story of Enron and WorldCom in your text, read it. They are typical multi-billion-dollar companies that acted unethically and ended up going under. A lot of people lost their pensions for 30, 40 years of work. Some people cried about it. Some people started over, and others actually committed suicide in some cases. They couldn't live with the thought that they're not going to get a single penny back. And the loss from Enron and WorldCom was so great that they didn't even have any money left after liquidation to give to pensioners of the company. So that can happen. All right. So we have a little excerpt on Enron. Please read that. You guys have stop and apply?
You do.
Okay. Remember, stop and apply. When you see it, don't go zooming past. For sure. All right. Let me ask you a question. That's for my stop and apply. I'm going to make a statement, and I want you to make a guess at which of the conventions, characteristics, or ethical issues it applies. Okay. Do you have that exercise in your book?
Probably do. That's probably another one.
Okay, let me throw it out. If I say to you, decision makers and users of accounting information, which of the three do you think that applies to? Convention?
Full disclosure.
Full disclosure?
Yeah.
Okay, why would you say that?
Because for them to make a decision, they have to know all of the relevant information, or as much as the relevant information as possible, to
Okay,
make the decision.
anybody else agrees with that?
I know.
Okay, let me just turn it around then. Maybe make it a little better. I'm going to give you another scenario, and then tell me, in your opinion, whether it's qualitative, okay, or any one of the other conventions that we talked about. Okay, just make a guess. You'll see it when you get into it. Let's say verifiability. What do you think about when you hear the word verifiability?
You could confirm that it's
Faithful
not
representation.
confirm that it's faithful.
Faithful representation.
Yeah, that the information is correct. Absolutely. What about relevance?
Could be useful. It's given at a time that's being analyzed, so it's useful.
Yeah, it's useful for the time that is actually required for, and so therefore the information is relevant to the
Valuable. Mhm.
reporting period, absolutely. What about, if I say valuation? Which one of them would you think about?
Evaluation
Not evaluation, just valuation.
or just valuation?
Probably estimating the values that wouldn't be misleading, or coming up with the values to present, but values that are accurate but not misleading.
Okay, very good. What made you think of that?
Something I read a few minutes ago. Not a few minutes ago,
Yeah, reading is hell, isn't it?
2 hours ago or so. Yeah.
That's okay. That's what I tell you. Reading and studying and practice. When you put them together, it's an unbeatable combination. If you don't put them together, it creates a nightmare for you. All right. So yes, absolutely. Okay, way to go. Don't forget, full disclosure has to do with transparency. That's what it's all about.
Mhm.
Materiality has to do with whether something is significant in amount. If it's a small amount, it's not considered to be material. If it's a large amount, it's considered to be material. So, for example, if a multi-million-dollar company can't find $5,000, they might be upset, but they won't lose any sleep. Does anybody know why?
Because they have multi-billion dollars.
Because it's a multi-million-dollar company, and therefore that $5,000 is considered not a big deal. Bucket.
It's not material to them.
Yeah, it's not material. But if a
Exactly.
small business on Two Chop Corner loses 5,000, what happens then?
All hell broke loose.
Absolutely.
Right.
Yeah, they call the police, the defense force, buy a gun, shoot innocent people, whatever, just because they can't find, because that amount is very significant to a small business. Okay? And that's how materialism works. Okay? All right. That's why if you have something, let's say, of value to you, and somebody comes in your house and treats it shabbily, and then you say, why are you doing that? That's important to me. They might say to you, well, what's the big deal? It's only whatever it is. So to them, it's what?
Small, nothing.
Immaterial. But to you, it's what?
Material.
Material. It's just like when you lend people your car sometimes. They speed around it and break it up. Because to them, preserving it is not what? Material to them.
Right.
Okay? For example, there are actually some people, if you tell them don't slam my car door, they get upset with you. Like, who do you think you and this old stinking car is? That's how people are. Because it's not material to them. And then, all right, so
You just gotta give them 1 or 2 lick shots today. That's all.
my grandmother had a name for those kinds of people. And she told me when I was a little boy, that's a long time ago. She said, whatever you do, stay away from don't care fi people. Anybody ever heard that? Don't care fi?
No.
No?
Young.
Then you guys are really very young and don't have old time grandmothers anymore. That's the other thing. Grandparents are too bloody young now. That's the other problem. But anyway, don't care fi people, just for your edification, in Bahamianese means be careful with people who do not respect your stuff. Okay? They will wreck you and your stuff and walk away without even thinking about it twice. And if you try to question them, you will not get a satisfactory response. Okay? All right, conservatism. Anybody remembers what I said about conservatism? It's about how accountants make estimates.
The text kind of described it in a way that that's like the last resort.
Okay. Can you read that piece in the text that's under conservatism for us?
Where is it? Okay. Oh.
Right.
Okay, so
Page 173.
when accountants are uncertain about the judgments or estimates they must make, they look to the convention of conservatism. This convention holds that When faced with choosing between two equally acceptable procedures or estimates, accountants should choose the one that is least likely to overstate assets and income. One of the most common applications of conservatism is the use of the lower of cost or market method in accounting for inventories. Under this method, if an item's market value is greater than its original cost, the more conservative cost figure is used. I don't know what that means, but I'm hoping you'll explain it. To continue, if the market value is below the original cost, the more conservative market value is used. The latter situation often occurs in the computer industry. Is it a lot more? Anyway, I guess you could take it from there. That kind of threw me off.
Okay, so here's how conservatism works. Accountants try their best not to do what some appraisers do in the market and overstate the value of assets. Some appraisers are famous for coming up with home valuations, for example, that are way over their real market value. And in some cases, they come up with home valuations that are substantially less than the market value of the home. It all depends on the appraiser, their experience, and their expertise. Okay. The accountant, on the other hand, being conservative, will say this: if you buy a piece of equipment and the accountant has to value it, if the market value is, let's say you buy a piece of property, if the market value of the property is 100,000, but the company paid 50,000, the conservative accountant will not record the transaction at $100,000. It will record it at the lower of the two, which is $50,000. Okay. So,
Okay.
yeah, so accountants are always looking to record information at the lower value rather than the upper value, so that at the end of the day, they would prefer that transactions are more understated as opposed to overstated. Yeah, so that's where the conservative approach comes in. So if you come to an accountant and say, man, you're recording that at 50,000, I think that's 150,000 in the market. Maybe it is. But the accountant will say, maybe it is. But the purchase price is 50,000. And so we're going to record it at the purchase price, which is the most conservative figure. If it's more than that in the market, no problem. If you decide to sell it in the future, you get whatever you get. But accountants are not particularly interested in the market value, not for recording purposes. And the reason for that is market values can be changed, misleading, and adjusted to suit somebody's fancy agenda program. Okay, and accountants cannot have that happening in its financial statements because of the wishy-washiness or the unethical behavior of persons in the valuation market. Okay? So that's conservatism, in case you ever come across that again. A guy who's conservative, he will probably date a girl who has a mini on, but marry a girl in a long skirt.
Yeah, that one.
Okay, Mario? That is not necessarily true. I'm just throwing that as an example of conservatism.
I was a
Yeah, a more radical guy, well, he would be more inclined to want to date a girl, you know, who has a little mini on, looks really sexy and bouncy. And then a more conservative guy doesn't want to date that kind of girl because she's a little too conspicuous. He would rather be conservative and maybe date somebody who is less conspicuous in terms of how she behaves and the way she dresses. So again, conservatism has all kinds of different pictures. Yeah, but from an accounting perspective, we try not to overvalue assets. We try to value assets at their cost or less, as opposed to the market values, which can change every other month, for example, which means that you have to go into the financial statements and change them every time the market changes. We don't want to do that in accounting. Okay?
Which work.
All right. So now that we understand those conventions and qualitative issues and ethical issues, we can now safely move down to the classified balance sheet. Do you guys have a definition of classified balance sheet in your book?
It pretty much names it as one with a bunch of subcategories.
Yeah, yeah, couldn't put it up better myself. It's the major elements of the normal three with a whole lot of subcategories. Okay, so let's see. Let's look at the first part of the balance sheet called the assets. Now, your text would tell you what the subcategories are and then give you an explanation for each one. For example, under assets, we have current assets, and we have investments, and we have property, plant, and equipment, and we have intangible assets. Okay? They all have their own characteristics. You'll see that when you read it. Current assets are those assets that a company uses during the accounting period, which is 1 year. Investments are those investments that the company makes on behalf of the company to make money like everybody else. Property, plant, and equipment are those assets that the company would purchase in order to make goods to sell to the public. And intangible assets are those assets that you cannot physically touch. Okay? When you read, you will read all of that. And these are the kinds of questions that examiners like to ask just to see if you bother to bother. Okay. So those are all the subcategories under assets. And make sure you go ahead and read up on what each category of assets are. Okay. All right. So I don't know. Do you guys have an exhibit called Cruise Company balance sheet?
No,
Or-
Bonali Company.
Okay. Is it a classified balance sheet?
Yes, it is.
Okay. What is the cash balance on that particular balance sheet?
41,440.
Good. Same thing I'm looking at, but my company's name is Cruise, but it's the same company. Now notice, has everybody taken note of the heading on the balance sheet yet?
Yes,
Yeah. It starts with
it starts with the company and it says balance sheet is date and it has assets up top.
now it doesn't always have assets, just happens here. But the three main headings for the company is the name of the company, the name of the statement, and the accounting period. Okay?
Mhm.
Every financial statement that you prepare should have those three things in that order. If you give me homework, so if you give me an exam answer on a balance sheet and you have those three in that order, you'll get 3 easy points. If you just start right doing the balance sheet and don't have those 3 headings, you will lose 3 easy points. Okay, just putting you on notice so you can practice doing the balance sheet correctly. All right, and that format never changes no matter where we go in the world. If you go somewhere in the world and it's different, be very suspecting of that particular financial statement. Okay, because they all should follow this convention. All right. So what is the first item on this balance sheet again? First element?
Current assets. Cash.
Well, that's the sub element. What's the first element? Main element?
Assets.
Assets. All right, and then we have current assets. What kind of accounts fall under current assets?
Cash.
Mm-hmm.
Accounts receivable.
Mm-hmm.
I guess any supplies, building, office supplies, stuff like that.
Yeah. Well, I mean, I don't mind if you call the ones in the company that you're looking at.
Okay, so they have short-term investments, notes receivable, accounts receivable, inventory, merchandise inventory, prepaid insurance, and supplies.
Indeed. These are all examples of current assets. You will come to know a lot more about them as we go on, but at this stage of the game, you're being introduced to it in terms of the classified balance sheet. And notice classifying really only means that you have some headings and subheadings broken down so that whoever's looking at the balance sheet can understand the information easier and relate it to very specific areas. So those are your current assets. What is the total?
$467,424.
Absolutely. And what's the other asset that you have?
Investments,
In what?
land held for future use, 50,000.
50,000. And that 50,000 is not the value of the land in the market. That 50,000 is what the company actually paid. Does everybody get that?
Yes.
Remember, we're conservative. Accountants don't care what the market value is. We only care about what was paid for the property.
Okay.
Okay? All right. The other subcategory of assets?
Property, plant, and equipment.
Yeah, notice what falls under property, plant, equipment, things like
Land, building, accumulated depreciation, equipment. Yeah, total property, plant, and equipment,
is equal to?
116,240.
Absolutely. Any more assets?
Intangible assets,
Intangibles such as
trademark,
trademarks. Yes, what is the value of the trademark?
2,000.
2,000. Do we have any trademark assets in the Bahamas?
I don't know.
Did you know, I'm sure most of you are familiar with the Bacardi trademark, yeah? Rat Bat? No?
No.
Well, if you look at the Bacardi bottle, you'll see like something sitting on it looks like a bat. That is the Bacardi trademark. And anybody who tries to use it without Bacardi's permission can be sued for millions of dollars potentially. Okay? That's how trademarks work. Okay? If you write a book and you copyright it, that's another intangible asset. If somebody uses your book in their name and say it's theirs, then you can sue them. If they use any information out of your book without giving you credit or getting permission, you can sue them. Okay, these are all intangible assets. All right. Notice also that accumulated depreciation does what to the cost of assets? Increase it or decrease it?
Accumulation, it increases.
Look again.
You said accumulate, which is what you asked?
What does accumulated depreciation do?
Oh, when you look over, it decreases it. It decreases it. 48, yeah.
Increases it.
Yeah,
Correct.
it decreases it.
Okay. So for buildings, the building values are decreased by how much?
It decreased by 34,560.
Absolutely. Such that the value of the building after the accumulated depreciation is equal to?
48,040.
Absolutely. And so, folks, notice how she's just slowly dissecting it one line at a time, one asset at a time. And that's what you have to do. There's no substitute for going through it line by line, step by step, and asking yourself, what is this and what's going on? If you don't go through that process, then you will not develop the amount of intimacy you need with the material to do as well as you can. And remember, I told you accounting is a very strange, bad fellow.
So we'll have to do one of these, Mr. Wilkinson, or we'll have to.
Or you will have to do a classified balance sheet and possibly an income statement. Okay. The thing is, you'll get the data, you'll get all the information. You just need to set it up properly.
Okay.
Okay, that's how it works. Okay, so the classified balance sheet is not here to be a big secret. It is just here so you can practice how to break it down into its components. Okay, so after all of the elements of the assets are completed, what are the total assets of this company?
635,664.
Indeed. How many liabilities outstanding does this company have?
Liability.
I could be wrong with to say 241,982.
Yeah, that would be correct. Because remember, I didn't say how many current or long term, did I?
No, you just how many?
I just said how many, so be careful. Now, if I say, what is the total current liabilities?
So
Yeah.
170.
170,000, see? What is the total long-term liabilities?
71,200.
71. And for your information, a current asset is an asset that the company used within 1 year. Any asset that is sitting around the company for more than 1 year is considered
Long
non-current.
term. Okay,
Same thing with liabilities. If you're going to pay liabilities within 1 year, it's current. If you have liabilities that's sitting around longer than 1 year, it's non-current.
okay.
Way to go.
Is 1 year on the operating cycle the same thing?
Say it again.
Is 1 year on the operating cycle the same thing?
Some of us believe so, and in a not so pure sense, yes. Because the normal operating cycle in accounting is 1 year. Okay, so that's a good point. All right, and what is the owner's capital at this point?
393,722.
Okay, so if we use the accounting equation, what is the accounting equation, by the way?
Assets
Equal liabilities plus owner's equity.
Yeah. So what would be the total assets in the equation?
635,000.
35,664.
Okay, which equals liabilities, which are
241,932.
yep, plus capital, which is
393,732.
does the equation balance?
Yes,
does.
It should always balance. If it doesn't balance, you've done something wrong. You need to go back to the journal entries and focusing to see where you made a mistake. Okay? That's how it works in accounting. All right. So that is your classified balance sheet. It is not complicated, but if you don't practice it and become familiar with its components and the assets and the liabilities and equity, it will create an unnecessary nightmare for you. When all you need to do is become familiar with it, and as you can see, it is not stressful at all. Okay. All right. The next thing I want to introduce you to are the 3 forms of business activity. Do you have that in that chapter? The 3 forms of business activity. No? The sole proprietorship, do you have that?
I don't see it. I'm looking.
Page 178.
Yeah.
Page
What's that?
178.
178. Oh, okay.
Yep, it's right there. What is a sole proprietorship?
This is owned by one person.
Yeah, it is typically owned by
One
one,
individual.
okay? And notice how the owner's equity account is set up on the balance sheet. It has the person's name, comma, capital, and then the amount of the capital. Just like in the classified balance sheet that we saw, correct? Yes?
Yes.
All right, so what is a partnership?
Partnership is a business that has 2 or more owners.
All right, and notice how the partnership's equity is set up on the balance sheet. You have each partner's name, capital, and the amount they invested in the partnership. Does everybody see that?
Yeah.
This crap is not difficult sometimes if only you commit. A big part, especially if you're a new student to accounting, the big problem for a lot of students in accounting is they don't want to commit the time to actually focus, read, and get involved, get intimate with the material. You have to. Does it mean you lose your mind and curse God? And no. But once you commit, you find out, say, oh, that's what it's so private, one owner. Oh, that's how it looks on the balance sheet. Partnership, 2 or more owners, piece of cake. That's how it looks on the balance sheet. Simple. Okay. And then we have the 3rd form of business. The 3rd a nice multiple choice question. Examiners love to ask this question because it's so practical and necessary to know. Okay? What's the third form of business?
Operation.
A corporation or a company. Notice how it's set up in the balance sheet, very different from the first two. Okay,
A lot more too.
sorry?
Mhm.
A lot more too.
Indeed, because companies are more complicated and complex than partnerships and sole proprietorships. Okay, so let's look at this corporate shareholders equity. There's another name for shareholders in your text. What is it called?
Stockholders.
Stockholder.
That's the means the same. Okay. So next week, don't let me say shareholders. And we didn't do that. We did stockholders. It happened. All right, they're the same. All right, so the stockholders equity section of the balance sheet is for the corporation as same as the partner's equity, which is the same as the sole proprietorship equity. Okay, they're just a different in format. All right. So what is the first item in the stockholders equity section of the balance sheet?
Common stock.
Oh, well, what's the heading for it?
Contributed capital.
Contributed capital, meaning everything coming under there is money that the owner or somebody invested in the company. Okay. So in this case, we have common stock of how much par?
$10.
$10
$10.
par.
$10. Oh, sorry, $10.
Yep. And how many are authorized, issued, and outstanding?
20,000
20,000.
shares.
So that is the initial par value investment into the company. So how did we get the $200,000?
20,000 outstanding shares worth of 20,000 $10 shares.
Yeah, $20,000 $10 shares. Couldn't put it better myself. Okay. The other thing about this stuff is you don't only just learn pure accounting processes, you also learn some things about investments too. All we're showing here is how accountants account for it in their financial statements. Okay? But a lot of this stuff is good to know and important to know, even outside of the context of accounting for them. Sure. All right, $200,000 in common stock. Any other contributed capital?
No, just retained earnings.
No other
Oh,
contributed.
additional.
Yes, 40,000
What does that represent?
paid in capital. I
Paid
don't
in capital.
What does paid in mean?
What, yeah, what is that?
Yeah, what does paid in mean? Let's say you purchased 20,000 shares for $13 instead of 10, right? Right?
Yeah,
The par value is $10, but the total value is 13. Anything over the par value is considered to be
paid in.
Paid.
paid in capital or additional paid in capital. Anything over the par value is considered the additional paid in capital. Okay, folks? So that's the contributed capital side of the balance sheet. And then, of course, we have retained earnings in this case. How much is the retained earnings?
1,000. I like 153,732.
And what is retained earnings, anyone?
I think that's like from the profitability, right? Like the income.
The
Net
profits that you keep in the company.
Boom.
Remember, when you have a company, you can do two things with your profits. You can keep it in the company as retained earnings or splurge it and spend the hell out of it so that when you need stuff again, you won't have to do it because you spent it. Okay? But that's not what prudent business people do. We put any extra profits into retained earnings, so we leave it there until we need it. And trust me, sooner or later you'll need it. Okay. All right, did they give you the certified balance sheet for Dell?
No.
No?
No.
Well, that's okay. Did they give you a certified balance sheet for any company?
Don't think so.
When I say certified, I mean classified.
I know what you mean. I don't see any.
Yeah, that's on 179.
Yeah, it's right there.
9. Yes.
By blinding.
Sort of. It's kind of like this. It's kind of
Exhibit
like
4, Mario.
I do.
Exhibit 4, 179.
Exhibit 4. I look. Okay, I'll listen.
it.
I see it.
Okay. So that's just an example in the real world of what we call a classified balance sheet. Okay. Not to worry, you're gonna have a homework piece on this to practice. It's not complicated. All the information is gonna be given to you. You just need to put it where? In the right place. So that it looks nice and neat, like accountants want it to look. Any accountant worth his or her salt always want their work to be neat and properly presented, accurate, complete, timely, and relevant. See those things come up again? All of a sudden, they come up again. So that's your balance sheet. Now let's look at the classified income statement. Well, the first one that they give us is the multi-step. So if there's a multi-step, it means there must be a what somewhere.
Bunch of steps somewhere, I guess.
No, multi-step is a bunch. If there's a multi-step income statement, it means there's a what somewhere.
A big something somewhere.
No, it means that
Okay.
there's a single step somewhere.
Oh.
All right, multi-step is what we're looking at now. Single step, we'll see a little bit later. So, do you guys have this nice diagram showing the service company, multi-step, and the merchandising company? I hope so. Do you have it? Yes?
Yeah, scared to answer.
What's your screen, Mr. Wilkinson?
Share my screen. Okay. Share the screen. All right, share screen. Denise says, wow, feels like I'm guessing. That's okay, Denise. That's how it feels when you're learning new stuff. Can you guys see it?
You can.
Yeah. So on the
Yeah, we
left
definitely.
side, on the left-hand side is the service company multi-step income statement. Notice it goes from revenues minus all the way down to what?
Operating expenses.
Operating expenses equals
Income from operations.
income or loss from operations plus or minus
Other revenues and expenses equals net income.
equals net income or loss.
Uh-huh.
Okay. So that is your multi-step service income statement for service, like here
That's
do,
in section 2.
sorry?
That's in our books of section 2, page 208.
Yeah, it's right there. All right,
Oh, gone. Wow.
most of it is.
208.
Yeah.
So that's
That's
your,
section
does everybody see it?
208 is in chapter 6.
That's why I say you're all fun for.
Yes, Mr. That's chapter 6 section.
They have it all the way in 6?
Yes, sir.
Right.
I skipped that.
You've been all about.
Pass all the assignments and gone straight to the next chapter.
Okay, so yeah, this is it's interesting they have it there. This is a snapshot of the multi-step income statement. as you can see, it just has all the steps involved. Notice when you compare it with a manufacturing company, it's pretty much the same except for which two categories?
Cost of goods
Cost of
sold
goods
and
sold
gross
and
margin.
Gross margin.
Yeah, cost of goods sold and gross margin. All right, those are the two extra steps within the manufacturing company that you will not see in a service enterprise. Anybody knows the difference between a service company and a manufacturing company?
The manufacturing company make things
To do what with?
to sell.
Yeah, manufacturing companies make things to sell. What do service companies do?
Serve, provide a service or
They provide a service to sell. There you go. Is tourism manufacturing or service?
service.
Why?
I know you was God's why.
Sorry?
I know that was coming next.
Yeah. Why is tourism a service?
Well, I guess they provide a service. I manufacture, I don't think they're a manufacturing company.
No, tourism is not manufactured. Okay? Who provides tourism services in the Bahamas?
Locals, payments.
Yeah, everybody, all of us
Mhm.
are supposed to be providing tourist services, even if we don't work directly in the tourism industry. Indirectly, we're supposed to be providing a service as well. Like when a tourist passes us in the street, smile, not looking sour and disinterested. See my point? Like the hell with you for coming to the Bahamas. We don't need you, you stinking tourist kind of face. No, we're all ambassadors. We're all selling the same service, tourism. We have a responsibility as a result selling that product to be kind and generous and pleasant to our visitors. Sometimes, even though they get stinky, we still have to be kind and gentle and pleasant because those dollars that they're spending, we need them. Did you know that? Did you guys know that we need those tourist dollars?
Yes, we do.
Without them, we can't buy oil for BEC to produce electricity. Without them, we cannot buy food so we can go in a big, fat, fully stocked food store. Because food and oil, for example, are paid for in US dollars, not Bahamian dollars. Did you know that? And since we don't have any manufacturing firms and all kinds of big business in the Bahamas, we rely heavily on the service industry, such as tourism. Tourism is our number one service industry. Okay. Interesting. All right, so there you have it, the difference between the multi-step service company and the multi-step manufacturing company. And that difference lies only in cost of goods sold and gross margin. After that, everything looks the same again. Of course, you can stop me at any time if something looks funny. All right, so what's the next statement we have? The multi-step income statement. Is your company's name the same?
The Villa Company. It's on page 209, guys.
Okay. What are the net sales for that company?
1,248,624.
Absolutely. And using the manufacturing formula, what is the cost of goods sold?
815,040.
Now, let me just say cost of goods sold represents in a manufacturing company, the cost of making everything that they're selling. So in this example, whatever they're selling, okay, is costing them 815,000. And so usually when you go into any business, service or manufacturing, you have to mark up your costs. So whatever you pay for it, you have to mark it up to make a profit. And so you might wonder, well, what does gross margin mean? Gross margin is profits before expenses are taken out. That's all it is.
Okay.
This is referred to as gross profit. same thing. Gross margin or gross profit is that profit earned by the company before other expenses are deducted. For sure. So far, so good. It's not complicated. You just have to practice it. Those who practice will do very well. Those who don't will do, like we say in Bahamianese, tingum. And we all know tingum in the bush.
I don't need.
No. All right, so do take your time and practice. Sometimes it gets a little boring, a little tedious. I might have been at this 2 hours already. So what? When you feel tired, remember what I told you, go to sleep and then get up again. Okay? Especially on weekends when you can maximize your study time. All right. So after gross margin then, or gross profit, is the multi-step income statement finished? Is it finished after gross margin?
Definitely not.
No, it's not. Because after gross margin, we have two other kinds of expenses to account for. The first one being
Operating expenses,
operating expenses such as,
selling, then general and administrative.
okay, whatever expenses you incurred, utilities, light, water, phone, salaries, GPS, whatever it is that you use to generate the revenue is referred to as operating expenses. So in this example, we have what? Two categories, yeah, for a total of $357,000. So now once we take out operating expenses, instead of just having gross margin and gross profit, we have a new income level, which is referred to as
Income from operation.
income from operations. It's total
76,448.
Indeed, indeed. All right. So that's your multi-step income statement. And then just under that, we have some other revenue and expense transactions that we need to net out from time to time. For example, your interest income for the year was how much?
5,600.
Yeah. And your interest expense turned out to be
10,524.
absolutely. So what we do in accounting, we take the greater, the lower from the greater, and we go with the balance of the greater number. Okay? We always go with the balance of the greater number. All right. Any questions so far?
So far, so good.
Yeah, I tell you, chapter 5 is not complicated like maybe 3 and 4 or even 2. All right. And then, of course, your notes will go on to explain to you exactly what I've told you about these different categories of classifications. Okay. Now you have your qualitative conservatism concepts. Then you have your classified balance sheet. Now you have your multi-step and single-step financial statements. So it should not be too difficult to overcome. Okay. It's looking for more interesting stuff. If you guys, do you guys have a single-step statement like the one I have on my screen? Single step.
Probably on page 2 of mine, or 210 or something.
Is it on 210, someone?
Oh, it is.
It's on
Which
two
one it
eleven.
is? Income statement is 211, yeah, for that villa.
The single step.
Yeah, it's there.
Okay, it's there. How is the single step different from the multi-step? The end result is the same, but how is the single different from the multiple?
That's less steps, I guess.
Less stress,
Less steps.
less steps, yes. You don't have to do all of the steps. We combine all the revenues in one category and all expenses in one and call it a day net income. If you don't like it, go and get a more extensive classified statement. That's the beauty of it. Some persons in senior management, they only want to see a single step of statement. They don't want to see a long worksheet orientated statement. Even though some of them may say, well, that's a great job. They don't want too much stuff to read in the middle of a board meeting. Absolutely not. So the single step statement is easy to work, easy to maneuver, very stress-free. But the multi-step will certainly give management who need it, wants it, more information. Okay. All right. Not difficult at all. So let's step into the world of liquidity to see if we can pull off a couple of formulas. First of all, what is liquidity?
The ability to pay your bills on demand.
Well, so all of a sudden, all kinds of short answer questions are coming up potentially for exam questions. That's my point. You cannot figure out what they are. You just have to learn them and hope that you can remember more rather than less. But that is every student's nightmare anyway, so don't worry about it. Okay. What is the formula for working capital?
I know that.
Anybody? Formula for working capital?
Current assets less current liabilities.
Period. See how simple that is? And where do you get the current information from?
We total it from the, what you call it? Classified balance sheet?
Absolutely. Because it is only from the classified balance sheet that you can easily get that information. Interesting. All right. So now you have two more important words in accounting that will come up all through your personal life as well in one form or another. That is liquidity and, if you own a small business, working capital. Okay, for sure. Wow.
It's like, okay, I just was gonna ask. The text answered the question though.
Oh, it did tell you. Okay. And so we see the example of the working capital. How much is current assets in this example?
467,424.
Less current liabilities.
170,732.
And therefore, your
That's the
current,
ratio.
sorry,
No, this ratio thing. You could explain that?
you mean further down?
Yeah.
Okay. Yeah, you might.
Oh, God. Sorry.
One of those Italian stallions. What you guys catch me up? I'm out of here. So the formula for working capital is very simple. And can anybody look at the little bit of calculation for working capital and tell us why is working capital important based on what you see?
Let someone else get out.
Well, actually, remember it's current assets less current liabilities. It shows that the company has enough current assets to pay off its current debt. Do you see that?
Yes.
And in this case, have a ton of money left.
Yeah.
Absolutely. So that is your simple formula for working capital. Please don't get it wrong next week if I ask. Okay.
It's chapter 6, you know.
I know.
Study that.
If it's in your chapter 6, you just review the parts in chapter 6 relative to what we're talking about.
Okay.
How about that little creativity? All right.
We could be all over this book.
Yeah, that's okay. I'm happy about that too. I mean, by the time the semester's over, the book will look old.
Book already look old.
That's good. An old-looking book means that it's being used. The worst thing you can have in your possession is a young book, unused. Okay, Mario. The worst thing you can do is I'm a young.
I only laughing. I laughing because you're making the young buck sound worse than the mini skirt.
Yeah. I'm gonna tell you something. I'm gonna tell you something with the young buck right now relative to the mini skirt. So like in accounting, if you have a textbook that it just doesn't look used, that means something serious is going on. You're not being productive. You don't want you don't want an accounting textbook that looks new. That means it's not being used and you're not making any progress. Similarly, you don't want a young chick who is at home being unproductive, Mario. Okay? What's the problem with that?
Probably not as beneficial to you as she would be if she was somebody with some substance.
Or even just interested in going to work to assist you with the
No, I lost. I lost, but I can't finish that statement. You gotta finish that one.
with the bills. I thought that was common.
Mario only 21 now. He's
That's true. I forget you just
Dan is hype.
I forget you just a youngster and
Yeah,
single. Yeah,
I just reached. They talk to Clint.
absolutely. My baby's 24 and he keeps, I said, Dante, have you thought about getting married? He says, hell no, Dad, I can't even take care of myself. I'm like, okay, at least you're on the right track. Take your time, no rush. You'll have a lifetime to be married. All right, so let's look at some ratios. Did anybody read anything about ratios? Like, what is a ratio?
I read it, but I didn't quite what do you call it? Understand it or
That's
comprehend.
okay. That's okay. What did you read? What did you read about a ratio?
If I'm being honest, I think that's where I stopped. That's where I stopped. Yeah.
Okay.
That's in section 3 of chapter 5, so I didn't really get there.
Did anybody read the definition or an explanation for a ratio? No?
No, I didn't.
Well, when you get to it, you'll see that a ratio compares one number or value to another one to come up with a result. And so we'll see how that works in a minute. Okay. If you give somebody half of everything you have, what's the ratio there?
0.5.
Which is equal to?
50%.
Correct. That's how ratios work. If you give somebody 1/10, what ratio is that?
10%.
Yeah. And if you're very much in love with someone, you give them 100%, what ratio is that?
Stupid.
That's good ratio.
Yeah. Who said good ratio?
Hadith.
Yeah, that's my girl, Hadi. She understand how this thing go. All right. When you've worked as long and hard as Hadith and been around, I know how this bloody thing goes. Unfortunately for Mario, he's still a young punk. He doesn't even know the time of day yet. And there's nothing wrong with being a young punk. That's okay. Enjoy it. And keep learning. Try not to fall over yourself too often. A few times is okay. A few times is okay, but not too often. Try to learn quickly, Mario. Because some youngsters take long to learn. And then we grow up and get older and we sometimes still don't learn anything. Then become old people who don't learn. Okay. So the first ratio we saw was the working capital ratio. Current assets minus current liabilities. That's the first formula you need to know. The second ratio you need to know is current ratio. What's the formula?
Current assets divided by current.
Current assets divided by current liabilities.
Now you see why you need to know the classified balance sheet, right?
Mm-hmm.
Because without that, you can't do these ratios. Correct? All right. And so when we do that, what answer do we get?
2.7.
Which means that our assets are 2.5 times greater than our liabilities, which means that we have more than enough money to pay our bills, correct?
Mm-hmm.
That's all a ratio is. In this case, the current ratio. Is it important to have enough money to pay your bills?
So what are you trying to find out? All these figures, they really need a ratio? The other things show them, or do they do all of these?
Who?
Like accountants, you have to do all of these, or just you could pick which one, because all show the same thing. A lot of these statements show the same thing, right?
It looks like the same thing, but they're all different. And yes, accountants do all of this and 10 times more. This
They
stuff
get
is,
paid them good.
this stuff is only the beginning,
Wow.
okay? When you guys sign, hopefully, I always encourage students who do accounting 1, even if you're not going to be an accountant by profession, please do both accounting 1 and accounting 2, so you can have a balance of the accounting thing. So that one of these days, if you open your own business and you hire an accountant, you understand what they mean. You know what to look for when you get the financial information. When you go into meetings with your bank, you understand some of the things they mean. All because you did enough accounting so that the real world stuff makes sense to you. Okay. So after suffering through accounting 1, don't panic and say, man, the hell with that. No, 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 no. As soon as the smoke clears and a couple of weeks pass, you sign up for 2 while you're already bruised and busted. And all the information is still what? Fresh in your mind. Yes. Don't wait another year and then say, nah, I think I can do 2 now. Then you have to come back to square one each time to figure out what the hell's going on. All right. So the current ratio here says you can pay your bills. Your assets, your current assets are 2.5 times greater than your current liability. So that's a good place to be. You always want to have more money than you coming in than you have going out in terms of bills. That's the point. Okay?
Yeah, actually,
Yes.
for this accounting principles 1, are we like going all the way up to like maybe chapter 8 and then stop?
Actually, we're going to chapter 10 and then stop.
Oh, we pushing P.
Yeah. Once your midterm is finished, then we're going to do at least 5 or 6 more chapters.
Powerful. Okay.
You guys are going to be learning a lot of interesting stuff. And that's why, again, I said, once you've finished and get through this initial phase, do accounting 2. It has a whole lot of other stuff that will give you that balance, even if you're not going to be a professional accountant. You never know, one day you might lose your job and have to go be a bookkeeper somewhere, help somebody keep their records, or whatever the case might be trained to do some other stuff. And all of a sudden, some of this crappy stuff that you thought you'd never need in life becomes very important. And then you're like, man, some people will say, am I glad I took that advice? And then other persons who don't take it say, you know what? I should have bloody done it. I'm telling you from experience, and been there, done that. Okay, so what are the profitability ratios then that we have? Remember we had liquidity ratios like working capital and current ratio. Those are liquidity ratios. And then we have a bunch of profitability ratios. Anybody sees them in the text? 1, 2, 3, 4, 5.
I guess they call them profit margins.
Profit margins and
I don't know.
that's the only one you see?
Oh, you mean look at the screen? Oh, yeah, 5 of them.
Yeah, 5 of them. Okay, and you'll encounter all 5 of them in your text in one form or another. Okay, you have profit margin, asset turnover, return on assets, debt to equity ratio, and return on equity. I know it doesn't make any sense yet, but eventually it will. For now, you're just going to learn how to calculate them and basically what they mean. Later on, you become a little more involved with them, and they will mean a whole lot more to you as accounting students. All right, so let's see how we calculate them. And the reason why I'm going through the calculations because I'm going to ask you to calculate some of these ratios. And in order to calculate some of these ratios, you're going to have to go to a classified balance sheet or look at some data I give you concerning a classified balance sheet. Because you'll have to go to that balance sheet or that data and pull out the information you need to calculate these ratios. So, what is the ratio for profit margin?
Net income divided by net sales.
Net income divided by net sales, which gives us a total of 0.057 or 5.7%. What does that mean? That net income generated for the year is 5.7% of all the sales that you made. Okay.
Okay.
So in practice, what that means is this. First of all, you had a profitable year. And secondly, the return on your investment that year in terms of profit was 5.7% of your sales, which of course is more than you would have that if you open up a bank account these days, correct?
Yeah.
Because the return on a bank account nowadays is less than 1%, isn't it?
Certainly is.
So if you have a business with a profit margin of 5.7, you're way ahead of the game. You need to stay in that business because you're earning more profit on it than you would if you put your money in the bank. Of course, the bank has safety nets. Being in business has risk, but that's the nature of things. If you want a higher return, you have to take a greater risk. It's quite as simple as that. All right. So that's the profit margin, simple formula. What's the next ratio that we have on board?
Asset turnover.
Turnover.
What does that mean?
Asset turnover, how often you turn over your?
You mean like, so that means like how much you get, like how fast you sell inventory, like after re-up on it?
Yeah, inventory would definitely be part of that denominator where you have average total assets. Inventory would be included in that as well, definitely. So it really shows how assets, current and long term, can contribute to the production of sales in any particular year. So asset turnover in this particular example has a formula of what?
Net sales divided by average total assets.
Correct. All right, and our net sales for the year based on income statement is what?
1,248,624.
Correct. Now notice how we calculate average total assets. We have assets at the beginning of the year plus assets at the end of the year divided by
2.
2. That's how we calculate average. Same average you did in primary school.
So it does come in
If you were not eating lunch or playing around with Suzette or something. Okay. All right.
So this ratio mean that we get, what does that mean? Like, what does this 2 times mean?
It means that the average assets in the company generate twice the amount of sales. So 615,000 in assets generates $1.2 million in sales, which is a good thing. All right. So
Okay.
these assets are actually generating twice the value of the assets in net sales for this company, which is really good. Okay. All right. Any other formula? Return on assets. What's that formula?
Net income over average total assets.
Okay. We know how to do average assets now, don't we?
We do.
And instead of net sales, we're using net income. Because remember, net income is really how we determine what? The return on our investment. After paying all our expenses, we have net income. And so that is the figure that we're weighing against average assets to see how assets are helping us to generate profits. Okay. So when
Then,
you do that question, yeah.
and then like net sales is the amount left after dealing with your operating expenses.
Net sales.
Yeah. I guess that's net income.
Anybody answer? Is he correct?
Yeah, that's
He
net
said-
income. Never mind.
Okay, you spotted. Okay. I was wondering see if you're gonna pick it up on somebody to say nobody or something. All right. Yeah, after expenses from when you take expenses from sales, revenue or sales, you get net income. And this is the net income that is being measured against average assets. So we're saying what? Net income represents 11% of total average assets, which is not bad. Okay. Very positive return. If it was negative anything, it means that you're experiencing losses and something needs to be done, or you're gonna end up in trouble. Okay. Any other ratios? Debt to equity, yeah. Debt to equity. Debt is what you owe, equity is what you own, correct?
Mhm.
So this ratio is very simple. Your total liabilities divided by your total
Equity,
equity, which in this case equals to,
61%.
is that good or bad?
I would say it's fairly well.
It's not good nor bad, it's fair.
Yeah.
Because what this is saying is that your debts already up to 60% of your equity, which is kind of high. You want your debts to be somewhere around 40% on average, no more than 50%-ish. But when you start hitting 60% and above, that's a big problem. Okay, so this company is heavily in debt, and it needs to pay down its debt as quickly as possible. Okay. You don't feel the burden of debt until you lose a job. Anybody ever had that experience? Like have a car loan or some other debt, school loan or something, then you lose your job and can't pay. Anybody ever had that experience?
So what happens in that instance? Like they take the money back and like you just gotta pull your child out of school?
Yeah, if you owe the school fees and you lose your job, then they'll send the child home and you still have to pay the balance, whether you
Correct.
send the child back or not. If you have a car loan and you can't pay the loan payments because you lost your job, if you don't get a job soon enough, they're gonna ask you to turn the car in. And if you don't want to turn it in, they'll take it
Right.
wherever you are. That's it. So if you're out on a date with the Hadith or something, that's it. You have to catch a jitney home
What to say?
because they're taking the car.
I mean, the miniskirt place you on BN.
Uh-huh. Okay. She'll have to call her daddy to take both of you home.
What is it again?
Okay. Growing up. All right. Any other ratios?
What is this? Return on equity. No, that's gotta be a good.
All right. Like how well is your investment working for you? Again, net income divided by average owner's equity. How do we calculate average owner's equity?
We take, I would assume that we are taking, I don't want to say the liabilities, but I want to say that, oh, is that like capital and investments?
Yeah, we take the beginning equity plus the,
Ending equity.
just as we did with the average assets.
Okay.
And
Then we divide that by 2.
correct. And so what answer do we get for the return on equity?
You get 18%. Is that like good?
That is very good. That means this company is earning almost 20% in net profits on its investment. Where can you find a rate of return that high anywhere? Nowhere. So that means this company is doing quite well.
Wonder what they doing.
Okay, for sure. Some other companies, if they work on some of their ratios, they'll scream. They're still in business because people still keep buying the product. But, you know, you start doing the numbers, it starts to tell you a story if things are not good. The only problem is a lot of, especially small businesses, they don't really have anybody looking at them and they're not interested in that anyway. But larger companies who are doing serious business, they're always interested in many of those ratios, if not all of them, because they all, as you can see, tell a different what?
Sorry.
Correct. Right. Okay. Okay. And that's it for
Chapter 5.
Chapter 5 is not as heady as chapters 3 and 4. Maybe, yeah, well, a little better than chapter 2. But chapter 3 and 4 will probably present some of the greater challenges for most. But if you did your homework and you did do a couple more problem practice questions, you should be okay. All right, in each of those categories. Don't be ashamed to go beyond the homework that I've assigned and try 1 or 2 others in each chapter. Problems, I mean. And again, if you get stuck during the study process this week, you can always send me a text or an email so you can become unstuck. Don't be stuck too long. Okay? Because the same thing you stuck on might come up in the test and then you don't get the credit you could get. And remember also in accounting, sometimes one thing builds on the other thing. So if you get the first thing wrong, everything that comes after is wrong. So in some cases, you have to be careful. Okay. All right. Any questions on any issues before we break? Let me see if everybody is in class before we break. Clinton, are you here now?
I've been here, I've been listening, I've been making sure I write my notes down.
Okay, excellent. Let me make sure I have you listed on my list. Clinton is here for week number 6. Great.
Yes, sir.
Let's see who else is. Okay. Veronique, are you here?
Still here.
Okay, Veronique is there. Okay. How about that? And Chanel.
I'm here.
Chanel is here. Okay, fantastic. So we're all here. We've all suffered through.
Vanessa's here too, sorry.
Oh, Vanessa, there you are. I'm glad you said that, Vanessa. Great. 1, 2, 3. Almost missed you. Okay. Kashanti, are you here also? Kashanti is the only Marine that is not in the group. All right. Any other questions you have from maybe from the homework or from some other area that you'd like to raise while everybody's in the room? All right, fantastic. I'm going to be assigning your homework in a little while. You have a whole week to finish your review. Hopefully you are reviewing all along. I always encourage students, don't wait until the announcement is made. The test is coming up next week. Like, man, I should have started reviewing. That's a nightmare. So I'm hoping that you would have.
Question, Mr. Wilkinson, sorry to interrupt.
No
When is our midterm?
Next week
Next week? Are we taking it at the,
at the Institute.
yes, sir.
Yes, 6 o'clock to 9 o'clock, right there.
Okay.
Some of you may not need 3 hours to do the examination, but you will have 3 hours to do it if you need it.
Okay,
Okay.
and it will be covering all the chapters we covered already?
Chapters 1 through 5.
Okay.
Okay. As I was saying earlier, please use.
Including 6.
Some persons have some stuff, some concepts in 6. Only those concepts, nothing else.
Okay.
Okay.
Yes, sir.
Only those concepts that rolled over into 6, you need to focus on in 6. Other than that, chapters 1 through 5.
Yes, sir.
Please write the examination in pen, black or blue, so that I can read it in the dead of night without having to strain my older eyes.
Okay, is this this the location on Market Street?
Market Street, man.
Oh, sorry, Market. What's that? What's that street close to Bar 20 corner?
No, not there.
Street right opposite the PMH.
Yeah, it's opposite the PMH.
Oh, okay.
Is that Elizabeth Avenue, isn't it?
Yeah.
Yeah,
Okay.
Elizabeth Avenue and Shirley Street, that big yellow building that's attached to Graham Thompson's building.
Okay. Oh, okay.
Right
Understand.
on the corner.
Yes, sir.
Okay? Yeah.
Yes, sir.
And of course, be there a little before 6 o'clock, so you have the full time to come in, relax, unwind, and settle down to do your examination.
Yes, sir.
Again, if you get stuck on anything, please do not stay stuck. Contact me. Let's sort it out so that you can move forward. Definitely, there'll be a homework assignment on the worksheet, closing entries and stuff like this, just as you did with the others, classified balance sheet and that kind of good stuff. Just go ahead and do all of that. The more you practice, like Kobe and Jordan, the better you will be at the end of the day next week. The less you practice, you might still play the game, but I don't know how many points you'll score if you don't practice. It's just like basketball. All right. So have fun, be safe, and see you guys next week at 6 o'clock at the Institute. If I am not there for any reason, somebody from the Institute will be there to invigilate the examination with you. Okay? So have a great week and good luck until next week. Okay? Take care.
Good night.
Good night. Good night.
Good night.
Good night. Take care.